So this is Anthony Vanalki with Deliver Capital. Today we're talking about our strategic partnership program. And we wanted to ask you guys a question. So how would you guys like to make the most amount of money in the least amount of time and headache? In the next 20 minutes, I'm going to share with you, how to be able to increase your volume and build an organic referral system, on how to access products in addition to merchant cash, and how we can revive lost leads and denied applications, where we can show you how you can make $1,000 to $10,000 per client by working with us, and our loyalty program and why you would want to come back. At the end of this webinar, if you have any questions, go ahead and write them in the chat box and I'll answer them at the very end. So who are we? Who's Deliver Capital? We're in the business of utilizing its tools and resources to help clients qualify for the right sustainable loan. So where you or your clients be able to grow accordingly. We're a team of bankers and underwriters, processors, analysts, compliance officers to be able to identify the right loans for you or your clients. We have access to over 5,000 lenders. Deliver Capital gives you the best odds of being approved. The best part is that we're a performance-based company. It means you only pay if we execute. Therefore, zero risk for any funding opportunities. Now, let me repeat that again, guys. It's zero risk. We're very confident in our performance that we don't take any fees unless we're able to perform. So what achieves the best results? How do you make more money and how to be able to get happier clients? Unfortunately, the majority of small business owners do not understand how to structure their loan properly to be able to present to a lender. This is by working with us, with our strategists, our processors, underwriters. We will correct any items before they go into submission, strictly optimizing the profile. But unfortunately, business owners are really forced to take high interest loans due to either personal or business credit discrepancies. This is where we get into our compliance department. We optimize the profile. We get them ready and submit for tier 1 financing. Unfortunately, merchant cash isn't always it's always the quick fix, but it's not always in the best interest for the clients. I always ask myself, how many of your merchant cash borrowers are either ecstatic when you give them a 1.2 to a 1.5 factor rate, where they're paying back 20 to 50% on the money they borrow. But if you really get them qualified for more money with a less interest rate, with longer terms, how would they be able to change that outcome? Just to give you a quick example. So if you borrowed $100,000 with merchant cash with a 1.3 factor 6-month term, that daily repayment is $1,031. That means that client is paying about $21,000 a month. It's going to kill their cash flow. You compare that to a regular tier 1 bank loan at an average, let's just say 7%, a 5-year term. That monthly payment is $1,980. That means that client is saving about $19,686 a month in cash. So how much, what would you think that client would be able to come back either for round 2 or refer their friends or their family? What I always like to say, the best business are referrals. It's less work, more money, and zero expenses. We as a company, Deliver Capital, we specialize in converting these merchant cash loans into tier 1 sustainable products. It gives the client the best product to be able to get, so they have additional choices for their longevity of the company. Referrals always come back. Now, because we have access to so many lenders, 5,000, so to speak, we work with all the major banks, the credit unions. But unfortunately, sometimes the clients don't always have all their financials organized, but through our research, we found, flexible lenders that only require an application, where we just submit an application based upon your personal or business credit. Each bank is different. However, if the client is able to provide their full documentations, we are able to get higher loan amounts, and the more documents they provide, the more access to lenders and banks that we have. But just to go through this real quickly, some of our working capital loans, we have an application only $50,000 to $150,000 per approval. They're unsecured, either choose from term loans or lines of credit, 6 to 10% rates, 3 to 5 year terms. Once we submit, it can take anywhere from 1 to 3 weeks for approvals. Now, equipment is a great resource. We love equipment loans. It's collateralized. But we have some lenders that will go application only, $250,000 per approval. Rates from 5 to 12%, 3 to 5 year terms, average anywhere from 2 to 14 days to close. Now, credit card funding is a unique product of itself. So we average anywhere from 30 to 150,000. Really based upon your personal credit. You get 0% promos, personal and business credit cards up to 18 months. And we like to utilize this as a tool sometimes to get into other programs. What I mean by that is if a client needs to reinvest some of their capital to either get their personal or business credit optimized, we sometimes can get them qualified for credit card funding, roll that money back into their compliance department, and get them qualified for either the working capital or equipment loans, moving forward. The next phase is we very big in accounts receivable financing. An example I like to tell my clients is that let's just say you are a company that sells widgets to Walmart. Usually pays out, Walmart will pay you after 90 days. In between that time, your cash flow need to be reinvested into the company. So we have factoring companies that can front you about 97% of the receivables so that you reinvest the money back into the growth of the company. We also have access to all the bank, statement loans, the merchant cash, where you have, up to $500,000 as low as a 500 FICO score. With our company, we don't like to use merchant cash as the final product, right? We always like to coach what's the exit from that. So if it's a stepping stone or a short-term bridge, where you can take that money, reinvest it back into the compliance department, get your personal, let's just say, and business credit optimized. Now you can qualify for the working capital, paper loans. So it's a really great program on how we structure from start to finish. The next section here is personal loans, which is where it's anywhere from 25,000 as high as $250,000. We have actually got approvals from 3 to 400,000 on certain occasions, but average rates you can see is anywhere from 6 to 10%, 3 to 5 year terms. Turnaround times from 2 to 14 days. So we have other products that we have access to. However, these are just the main categories that I wanted to describe, because we're so big on research. We're always up to date with the new products in the lending industry. So if any scenarios that are outside the box, please approach us and we'll go ahead and research and get you those results there. So, how do we get results for our clients? Either we have really strong relationships with our lending partners. We've identified and extracted all the underwriting guidelines for each bank, which took us years and years of research on how we implement these strategies. We always pre-evaluate the deals before submissions. So if I have the full compliance package and documents and the strategy created, we send it to our banker, we have them review, make sure that they give us their blessing before we do a formal submission and waste an inquiry. Because we have a large amount of volume that we provide to these banks, we get certain exceptions because of the relationship that we hold. That means our bankers will like to push your deals, moving forward. And we're very big on problem-solving strategies, right? So short to medium-term strategies that will enable the client to get more and better results and solutions for the time that they spend. This is what I like to call a stepping stone, where we take one product, we qualify them, reinvest into a second, and there, until we hit the target, for that client. We're very big on creative solutions if anybody has any credit challenges. Now, as I said before, we would like to turn these clients from merchant cash into tier one financing quickly, right? It's like the Bank of America's, the Wells Fargo's, of the world. That's really the relationships that we hold with tier one. So if you have a client, the process that we analyze is that you send your clients to us, and either they're going to fall into 3 different buckets. Okay, so if we look at it and they pass compliance, we're ready to submit. Day one, we'll go and do the submissions and get them to the target they're looking for. If there's any challenges that we face, either with credits, personal or business or financials, this is where we work with our compliance department. We like to fix and prep the file before submission. The last bucket is either there's denied, either they don't make enough money or the credit is so shot that it's going to take too much time for us to redistribute and get fixed. And we like to say that, time is definitely money. And of course, we don't want to waste it because it's part of the business of growing. So this is what we look for when we analyze our clients. The personal credit in the ranges of anywhere from 660 to 680 above. Of course, if they have a 700 or 720, it creates a less of a headache or then questions or red flags when we are going through the submission process. But if you look at and analyze a personal credit, it's anywhere from usually 4 trade lines, $5,000 a minimum for each one. One installment should be allocated on there if you have an auto loan or a personal loan for 15 to 20,000. We'd like to see at least a compilation of everything around $40,000 in trade lines with a minimum of like a season to 2 years. Credit utilization, the benchmark, we like to have it at 30%. So if you have a $10,000 limit on a credit card and you have a $3,000 balance, you're using 30%. If you go above that, it could create some red flags between the bank. Of course, no major delinquencies on a credit profile. Of course, there's exceptions to the rule. Everybody has some compensating factors. If your business credit or your financials are strong, there's some exceptions that we can ask for to bypass and submit immediately. The next section here is business credit. So if we can have a minimum of around $25,000 in business financial trade lines, of course, no major delinquencies. If you have a Duns & Bradstreet payday score established, it definitely helps. No existing working capital UCCs. A UCC1, which either blankets all assets, is one of the deadliest UCC versions out there. We would need to create a structure to consolidate and get rid of that, plus including the new submission with a new approval. Again, there's exceptions to the rule, like anything else. Equipment loans are, because it's backed by collateral, it's not typically need to be paid off, during the submission process. Now, the great thing about business credit, just how your personal credit is a major factor. If you have an established business credit, you could actually get 2 to 3 times higher approvals with having that establishment. And I think it's something that a lot of business owners don't take, they don't really look and investigate as building, that side of the credit. It's usually the personal credit, which is very much looked into. So we have a lot of coaching and strategies to help people, build on their business credit as well. For the financials, if we can provide, 2 years personal and business tax returns, year-to-date financials, typically 4 months bank statements. If we're able to get the full picture, allow us to dictate what we can and cannot use. I always tell my clients, I want to know the good, the bad, and the ugly. It's up to us to decide on what we can and cannot use to be able to hit that execution rule. So if your clients don't qualify, they don't meet these criteria, what do we do? So in this particular case, how do we overturn these unqualified prospects, right? The compliance stage, where we have credit management strategies, where we have the recipe to get them to an 800 FICO. If there's any discrepancies like late collections, bankruptcies, this is where it takes our credit department, around an average about 2 to 8 weeks to get those corrected. We also have credit enhancement capabilities where we're adding trade lines where we can boost up their scores from 5 to 20 points per account. This is where also the business credit program on increasing their business credit from establishing from all of the, Equifax, Experian, SBFE, Duns & Bradstreet, PayNet. And so if we're able to prep it and get it to that stage before submission, it's the higher probability of having the client get to, the dollar amount and the lower interest when we submit. Now, I wanted to provide some recent examples, right? Action always speaks louder than words. But to give you an example, this client, came to us. He, his first year in business, he had about $800,000 in revenue. However, he was only able to apply for merchant cash. Now, he's recently hit his 2-year anniversary mark. Now he's grossing about 1.9. But if you look at his credit at a 645 FICO, he doesn't hit that 660 minimum, FICO requirement, there would have been no chance for this person to get qualified with the major banks. And because of our credit strategies, we jumped to score over 50 points in about a month, and we had him approved for about $400,000. So you can see here, if you look at this first circle where he had about 5 accounts late, In the second slide here, you can see there's only one. So removed these collections and these charge-offs, which would thus increase his score to a 667. But the other challenge he had, he didn't have enough established credit. So we added some additional trade lines and got his score shot up from 694. If you look at the very beginning slide, the start date was December 20th. And 7 days later, we got him to a 667. And just a few days ago, when I pulled his report, you can see he's at a 694. We just got him approved for over $400,000 at a 6% rate on a 5-year term. Next example I have here is somebody who had a bankruptcy. You can see on November 14th, he started with us in the bottom circle, made a public record with the bankruptcy. And within about three and a half weeks later, you can see the public record was removed, thus making him compliant. We got him submitted. Now he's been approved for about $240,000. This next client is also a work in progress. You can see here about January 10th at a 669 FICO, but look at the inquiries. He had 55 inquiries. He was going through some other brokers and they shopped his credit to the maximum. Within, let's just say, in the 6 days, we got rid of 50 inquiries, which increased his credit score to a 687. But that's not the final solution. Of course, the credit utilization was definitely a factor. He had a few accounts that were maxed out, and he's still a work in progress for us, creating and reducing that credit utilization through different strategies that we have done. But wanted to explain, one of the main factors. If you have 55 inquiries and the bank looks at you, you're not going to get a loan with a tier one, sector. So this is definitely a compliance tool that will get them to the next stage. So, we give you more than what you ask. So we overachieve the client's target, so they have better options to choose from. Shopping from all the qualified loans, we picked the best terms in their best interest, given all the approvals that they ask for. The client has the option to either go for none of them, some of them, or all of the approvals. Where utilizing this tool is really going to help you monetize your current and your past relationships. So if you look, including your approved and your denials, if you go back the last, let's just say, month or 2 months, how many of these clients were you working with that were able to, if we can do some compliance work and get them back and restructured, would they be able to qualify for tier one? Answer is yes. Now, the next side here is, the jack of all trades and the master of none. And the reason why I say that is if you focus on what you do best, it's definitely the recipe for success. You want to be able to clear your time to acquire and nurture more clients. So if let's just say you're a company that you take the client from start to finish and you do the back end and the front end, how many clients are you able to successfully handle? By working with a team, we support you in all sectors, from training, from the back end, from submissions, the research. We've created a very streamlined, robust system with all the staff and being able to work as a team, be able to get you 5 times more the amounts of revenue and approvals moving forward. So with our partners, we've really broken down to 2 different sections here. One, the affiliates, where if you just have a book of business and you just want to refer that clients, you provide us the application, just the minimal information, we do the consultation, we do the work, we'll pay you 1% of the total amount of money that we raise them. So if we get them, let's just say a $200,000 or $300,000 approval, you're going to get paid about $2,000 to $3,000 in this scenario. Now, if you're a professional and this is something that you want to take to the further stage, as one of our ISO partners, we would teach you how to, speak with the clients, teach them about the lending programs and what programs they fit. You gather all the documents, get them under contract. This is where we're going to reduce our rates to a buy rate. It's kind of like, let's just say, a wholesale rate, where anything above, the 8 to 10% range, this is for yours to keep. So if you sell it at, let's just say, a 12% rate, and we give you the buy rate of 8%, that means you're making 4% margin on an account. So let's just say if it's a $200,000 approval, and we give you a 4% margin. You just made $8,000 by just doing the front end work and working with us. And we've created something called a loyalty program where we reduce our buy rates as you fund more deals with us. So I'll give you an example here. So when you start off with us, you start off in the bronze. Once you fund over $1 million, we have our buy rate at 10%. So if you have an average anywhere from $100,000 to $300,000 per client in approvals. So how many clients would you need to bring in order to hit the next stage in the silver? So the thought process here is that every million that you fund with us in approvals, we're going to reduce our buy rate, thus allowing you to make more money with each client and the submissions that you provide. So 1 or 2 million, you get a 9.5%. A gold rating will give you at a 9% rate. Sorry, the other one was 9.5. This one was 9%. A platinum from 3 to 4 million is about 8.5%. And then when you hit the platinum plus, we cap it at 8%, and it's anywhere from 4 million and above. Now, what we wanted to do is to give you an incentive that if any submissions from now until the end of February, we're going to give you that platinum plus rating to be able to jumpstart the relationship, get understanding about how we work and the analyzation process. So for any deals submitted from now into the end of February, we're going to discount our buy rate at 8%. Okay. Now, we are definitely the partners that you're looking for. We have the ability to structure, fix, enhance, and execute the loans, successfully. We're providing all the training and the systems to be able to help you increase your book of business. We've created, proven sales scripts, loan education, training videos, even one-on-one coaching. So thought process is this, right? As a team, your success is our success. So by being able to provide you with all the tools and resources, marketing assets, et cetera, that's going to allow you to bring in more business, make more money, and thus helping the whole team in its entirety. Now with our coaching the clients and the partners, we're going to teach you how to be able to increase their scores from 30 to 60 days on average by working with our compliance departments, different strategies on optimization. There's a lot of training videos we've created for that particular purpose. We've mapped out over hundreds and hundreds of different banks with all the underwriting guidelines. So that research is part of that team effort. We want to be able to take away that burden away from you, right? Creating a robust turnkey system where it's going to free up your time to be able to make more money. So what do we need to get started, right? So the partner agreement is something that we'll send out to you. We have an application, you fill out the information, we'll send out an agreement to be able to get everything formalized. At that point, we'll be inviting you to the ongoing training webinars. This is where I told you about the access of all the videos, the scripts, marketing assets. That is only given to the people who have been approved with our program. So we're going to send you out an application, go in and send it back. Doesn't cost you anything to sign up, just by being able to have access. We just have to have a KYC and move forward. Now, what do we need in order to analyze a profile? If you have clients, if you have 4 or 5 different clients right now, and you want to say, okay, well, which one of these clients are going to fit the different buckets for us to be able to move forward. So all we need in the very beginning is just an application fully filled out with all the information, the financials, the information about the business, debt schedule, et cetera. And within 24 hours, we will get you a response. At this point, we understand in the very beginning, you might need some training to do that. So our team and our staff are willing to get on the phone with you and the client to be able to close that transaction with you. Right? So it's a team effort. This is what we do. So to be able to get started, if you look at the partners login, go to the website, Deliver Capital. Any emails or information that you want us to respond to, please email partners@delivercapital.com. Of course, our number is 800-311-9894. So currently, if you have any questions, please answer it. Please ask it in the Q&A. I would like to go ahead and answer anything you guys have. I'm sure there is a few questions. Let's see here. me see. Submit an application. Yeah, simply I will. If you write your email, if you haven't signed up through the partner page at all, we'll go ahead and send you the application through that. Giovanni, you're new in the industry. Yeah, great. So we've, our whole training process was really meant to take somebody from, who's new to the industry with the step-by-step guidelines, the education, all that information will be given to you once you are approved through the process here. So will you email me the PowerPoint? This webinar has been recorded. We will put a version of this online and we'll send it to you. That should be fine. What's the minimum credit score you accept? How long does it take for you to convert someone from MCA to Tier 1 usually? Great question. So looking at, when we analyze the profile, we look at the personal credit, their business credit, and their financials, and depending on the health of each one of these sectors, it's going to allow us to dictate the timeline through compliance and the audit version of it. Usually a lead cycle could take anywhere from 15 days to 60 days from start to finish to get closed. Now, some of these lenders, some of these clients, if it's just discrepancies like high credit utilization, then that could be a quick fix. We can stimulate the money through a bridge lender or some other type of third-party loan, pay down the debt, do a rapid rescore. Within a week later, they can go into Tier 1. So it all depends on what is the current scenario profile that we're looking at. Who structures the pricing and the deals we submit? So looking at the buy rate scenario, so let's just say right now, if you submit a deal tomorrow, right, we're going to give you an 8% buy rate. So we work with you on allocating the bucket that they fit in. And so once we work and we give you that final approval for which bucket, we're going to give you the buy rate. And at that point, we'll say, okay, well, how much money would you like to, what was the margin that you want to increase this by? So if you want to sell it at 12%, you can get it as high as 15%, you make the difference on the back end. And everything is actually, the clients won't know what your commission structure is from this. So it's blanketed as an internal agreement. So when we get paid, we then pay you from our company account. What do most reps do for leads and cold calling effective? I have contacts, but we'll go through them quick. Great question, right? We are actually creating another webinar or some material to provide you some marketing suggestions. But the common sense factor is this, right? If you were able to qualify a business owner, which, majority of business owners always need capital. If you go down and knock on somebody's door and say, hey, how would you like to get $100,000 at a 6% interest rate unsecured for a 5-year term? The product that we allocate them is like the Ferrari of all cars, right? So there's no other better product available. So the leads and the referrals come naturally. But if we can send out actually a document after and provide you some suggestions for that. That's actually a big topic of itself, but there's a lot of different ways of getting a hold of prospects. Merchant has to wait 3 weeks to fund. Why not offer MC as a short-term and let compliance repair the credit in the meantime? So great question, Glenn. It's, of course, depending on the challenge that the client is currently in, what needs to be fixed. If it's credit utilization, we have private lenders that can pay down the credit's utilization. We have merchant cash as a tool to, let's just say it's like a $50,000 amount that needs to be paid down for the personal credit. We could qualify for MCA, get them that $50,000, roll it back into their personal credit. Even though a UCC will be filed, but if they qualify, let's just say for $100,000, we can wipe out the existing MCA by consolidating it and going into Tier 1 financing. So we allocate the different programs. Just for an example, I said earlier on, the credit card funding, could be a program, roll that back into paying off, high interest merchant cash loans, wipe that off, and then we go to tier one. So we play with each program. The strategy with the consultation is what I create when we execute. There's a plan that's always laid out before if we just apply. Please explain. I'm in the industry. Can you please explain what and how the buy rate operates? Okay, so let's just say a client, we go through the sales process. They're very interested in working with us, and they're just needing $100,000. Now, the buy rate for us currently, we'll just say it's going to be 8%. That means that when the client funds with the $100,000, he needs to pay a percentage of the amount that we acquire for him. So if our buy rate is 8%, and let's just say you sell it at 12%. So it means a 4% margin between the 8 and the 12 that you're going to make in this scenario. So the contract will show for 12%. We have a private agreement for your margin of 4%. When we get paid for the $12,000 from the success of that loan, we then pay you the $4,000 from our company account. It's a private agreement between us. It's not disclosed to anybody up front. Are we assigned the website? You're not assigned a website. We do have a partner that will be able to create a quick and very inexpensive website for you. I think they can range anywhere from $300 to $500. It's a great investment, especially for your marketing, lead capture, if you're doing Facebook or Google ads or Facebook groups. There's a lot of different ways, but a website and landing pages are very recommended, especially for lead capture tools. But we can help you and refer that particular partner that is specifically with discount for any clients that we give them. As an agent, do I need any E&O insurance? No, this is a 1099 independent contractor. You're not employed by Deliver Capital. You are your own business working with us. So no E&O insurance is needed for our sake. Along with the buy rate, is the lender also charging a fee? Majority of our lenders do not charge an origination fee. Sometimes they might charge like $100 setup fee or some sort, but very rarely do we see that. I know a merchant cash, sometimes these lenders will charge a 2% origination just by funding the deal. It's not the same with the major banks. How much is the website? Of course, the complexity of what you're looking for. It could be anywhere from $300-400 as much as $1,000, depending on how involved or how complex you want the website to be and what you want it to do. But we'll take a note and refer you to one of our partners. Great quality for the price that they provide. All right, guys, if there's any other questions, by all means, I will. Is there any upfront charges for the client? There is not. For any funding, there is not any charges at all. If they have to go through some credit compliance work, that is a separate department, and any work that needs to be done through the legal side there, they typically would have a small nominal fee for the cleanup. All right, guys. Well, thank you so much, and looking forward to working with you. By all means, we're always available and accessible for you. Your success is definitely our success, and happy funding. Thank you very much.